Okay, so just a few words of introduction before we get started, and in the meantime, the others can log into Zoom. So welcome everybody. Thanks for joining us for this webinar today. This is part of a series of webinars that we are organizing at Chapter Zero Brussels to show companies that can really show leading practice on climate governance and implementing ESG and sustainability within the board. We're really happy to have SIPEF with us today. I will actually just say a few words about our speakers. So my name is Stephanie and I'm the Association Manager of Chapter Zero Brussels. Most of you probably know me already. And I'm also welcomed today with Sophie Velge-Lameran, who is a valued member of our advisory board of Chapter Zero Brussels, and also is a member, actually one of the founders, and also the vice president now of the Family Business Network in Belgium. Sophie has actually been an independent director of SIPEF during the last 12 years, up until the last General Assembly, in fact. She's also an independent director of the board and a member of the Audit and Risk Committee of Banque Transatlantique Belgium, which is part of the group CIC Crédit Mutuel. And yes, we really want to say thank you to Sophie as well for helping us to set up these webinar series and for also involving the members of Family Business Network as well. So our speakers today, we're really happy to welcome Francois and Petra from SIPEF. Francois joined SIPEF back in 1979, and he was specializing in the palm oil sector and other agro-industrial activities, and also their financial management. He was Chief Financial Officer of SIPEF Group between 1995 and 2007, and he has been the Managing Director of SIPEF since 2007 and the Chairman of the Executive Committee since 2014. Thanks a lot, Francois, for being with us today. We also have Petra. Petra has been active in the renewable energy industry and was previously a group sustainability manager at New British Palm Oil until 2015, when she was appointed Director of CSR and Sustainable Development at Musim Maas Holding Limited. Until March 2021, she was Vice President Sustainable Sourcing at Unilever. And from 2017 until mid-2021, she was a director at SIPEF, and she became a member of the Executive Committee in June 2021. So really happy to have you both here. And actually, I will give the floor to Sophie to just say a few words as well before we get started on the presentation.
Yeah, I would like to welcome you all, and in particular the members of the FBN. And as you said, Stephanie, we had the first discussion with the chairman of Bekaert, Jürgen Tingren, which was very well received. And it showed us how, by concentrating on innovative products, contributing to the climate and the energy transition, it could really reduce the cyclical nature of the business and setting higher growth ambitions. And now we're very happy to welcome SIPEF. And as some of you know, SIPEF won the Family Business Award of Excellence in 2018, and it was already thanks to its long-term vision and very authentic concern for sustainability, because I think that as a sixth generation business founded in 1919, SIPEF has a multi-generational approach, and when you think next generation, you think automatically planet and people. So welcome, and a big thank to Francois and Petra to give us time and to explain how proactive SIPEF is.
Thanks a lot, Sophie. And just a quick note as well for logistics. If you have any questions at all during the presentation, please feel free to drop them into the Q&A, and we will cover them at the end of the presentation from Francois and Petra. So without further ado, we hand over to you, and thanks a lot again from our side for sharing your best practices with our group.
Thank you very much, Stephanie, and thank you also, Sophie, for the very nice introduction. Welcome to you all. We'll try to give you, I'd say, a view on the past and the future of SIPEF in the journey towards, I'd say, more sustainability and a better development towards the sector, which is a combination of both in many cases. So please, yes, Stephanie, the next one. So we're looking at the company profile and the sustainability journey up to today, which is a little bit of, say, my contribution. And I would like to hand over to Petra for the ESG journey from now on with more, I'd say, what's coming ahead of us. So SIPEF is the connection to the world of sustainable tropical agriculture, and the connection is easy to the extent that we are listed on the Belgian stock exchange, and we are sustainable tropical agriculture, meaning that we produce commodities as an agricultural business with some facilities or a slight downstream approach in certain aspects, but always focusing on the tropical areas. That means also very labor-intensive business, and always with a sustainable approach for the last 15 years, please. So if you put it in other words, SIPEF's business strategy is in fact built on controlled growth as an upstream player, and to be the preferred supplier of traceable, sustainable, high-quality products, looking at diversification into the targeted markets. All quite, I'd say, important words in the strategy as such. Controlled growth to the extent that we want to, I'd say, build on our own cash flows without too much leverage. Upstream player, as I said, in agriculture and producing mainly commodities. Then preferred supplier, because we're looking for, I'd say, links with our customers and be, I'd say, long-term relationships that we build on with our customers on traceable, sustainable, high-quality products. And that goes as well for palm, but also for bananas, and in the past also for rubber and tea, which we in the meantime have abandoned because we were not, I'd say, sufficiently developed to mean really to be an important contributor to the product markets. Please. SIPEF in a glance. At a glance, so very labor intensive, with more than 22,000 employees in about 4 countries. More than 32,000 tons of bananas are produced for the European market, but mainly 400,000 tons of certified crude palm oil, which is produced for, I would say, mainly the European consumer. All of that is 100 RSPO compliant, while the bananas have been Rainforest Alliance certified. So the certification is something which is very close to our heart, and also one of the bases for which we state that we are sustainable and traceable. Headquarters in Belgium, small office in Belgium, guiding, I'd say, the troops on the other side of the world, where we have offices in Medan, in Papua New Guinea, and in Ivory Coast. Please. A relative small business for the sector. We represent about 0.5% of the world production of palm oil. So not really a very important player. Also on bananas, we represent about 1% of the European imports of bananas. But looking at size, it represents 81,000 hectares of planted areas. I would say, to put that in the right perspective, it's about 3 to 4 Belgian communities to make it, I'd say, visible for Belgian people. That means that we would plant up 4 communities completely with oil palm and rubber, or in this case, mainly bananas is remaining, as rubber is a very small part of the business, and palm is where we go for. Indonesia represents about 82% of our business. 17% is planted in Papua New Guinea, and 1% is entirely and only planted in bananas in Ivory Coast. Please. That brings us, I think, to what sustainability means for us. And if you see the next slide, Stephanie, then you see that sustainability is in fact at the core of SIPEF's business model. And the group has made a top-down commitment to ensuring its activities make a positive contribution to the environment, society, and local communities. And that demands for a certain explanation, because what we look at is historically, in fact, since 2005, we made a major switch in the policies and the approach of the SIPEF group. We were before agricultural commodity producers, but with the booming activity of palm in the world, where palm was discovered as one of the main contributors to prepared foods in the world, but mainly also in Europe. We saw also On top of that, a switch towards biofuels. And we saw that the stress was coming from the supply side to meet, I'd say, an ever-increasing demand for vegetable oils that was fully taken up by, the gap was closed by palm only to a large extent. And seeing that challenge, especially in Europe, we thought that we have to look at it from a different perspective. Let's try to look ahead. Where will palm oil be in the next 10 to 15 years? And we immediately saw that, I'd say, together with our reference shareholders, the families who are behind us, the investors that support us, and the management, that would be a joint effort from all of us to take that challenge to become a sustainable palm oil producer. Meaning we're relatively small, but we want to, I'd say, differentiate ourselves completely from the glut of palm oil, which in the meantime is existing. 80 million tons is produced in the world, whereas 15 years ago it was less than half. And we immediately saw that we had to look for dedicated markets where, I'd say, our efforts to do sustainability efforts would be appreciated. And it would also mean that we would be representing a smaller part of the sector, but a part which is thinking ahead, is trying to stand for certain principles and criteria, and meaning that also the company as such, yes, had reduced expansion. Because even if you produce, I'd say, a product which is certified, where we missed out probably and where the biggest effort has been in the past is that we were also limiting expansion to areas which were fully certifiable and really traceable to the palm. And that made that, in fact, SIPEF was not developing as some other investors, but on the other hand, created a kind of niche activity, which was, I'd say, appreciated over time, and which is giving us currently also premiums, where our products end up in premium quality products. It was also, I'd say, a reflection that we made to say, we are in Europe, we have European investors. We work with European people who look maybe, I'd say, in a different way towards sustainability, traceability, and so on. It's a commitment that we want to take to give an investor at all times, say, the consent and the comfort that when they invest in SIPEF, that they also invest in a reliable, sustainable palm producer, and that they will never be in conflict with, I'd say, messages that might have gone out over I'd say, the unstoppable development of oil palm to meet the demand, which was ever increasing over the last 15 years. And Stephanie, on the next one, I would like to show a little bit of where we are today, because of course we are sustainable and we have a certified status, and we think that certification is always a way to prove to the investors and to the stakeholders in general that you are working according to your principles and criteria. But certification on palm means that indeed there is the RSPO, which we fully comply with, and all of our activities, mills and so on, all move into that direction of certification, which can be either for food, which I'd say more linked RSPO, or more to biofuels, ISCC, but at all times, I'd say fully in line with the latest updated certification statuses available. Also for bananas, we follow exactly the same track. We produce bananas, but we produce bananas in a way that the consumer in Europe is fully comforted on the quality of the product and also on the traceability of every banana that they find in the box in the supermarket. That was, I'd say, something which was existing for the last 10 to 15 years. But now we see also that we are, I'd say, going beyond that, because we have benchmark scores, which are, I'd say, looking not just at certification, but looking at how the company is performing in the markets, how the company is performing in that environment of stakeholders. And there we have, I'd say, three elements in terms of benchmarking. We work with SPOT, which is a sustainable policy transparency toolkit, which is linked to the 100 palm companies that contribute to it. There is Forest 500, which is more, I'd say, linked on 350 companies that are looked at from a deforestation and compliance perspective. And then CDP, which is, I'd say, a larger organization, which is looking more at forest and climate change over, I'd say, a longer period of time. All these three have been major contributors to show that, in fact, we work on a very transparent basis. We use the term walk the talk. I think it's very important that so far we've always done what we were saying. And that is, I think, probably one of the main issues for every company that is heading towards a better sustainability. And I think we try to combine, I'd say, always profitability with, I'd say, sustainability and traceability. And we try to use the phrase, and we stand for the phrase, doing well by doing good. And I think that's another element of our way that we look into business and into serving stakeholders. And Stephanie, I would like to end with the last one, transparency. Just an example of I'd say what we have is that we have full transparency by what we call geo-SIPEF. So on the website of SIPEF, you can link into this application, which gives a complete detailed overview of every place we are, what we have, how we develop, what the certification is, and how we have, I'd say, governed that asset. And that is a way of being fully traceable for every person who's interested in the operations of SIPEF. I think that covers more or less, I'd say, the past. I would like to hand over to Petra, who will look at the journey and future ahead. Please, Petra, go ahead.
Thank you, Francois. Good afternoon, everyone. Thank you for joining us today. We're very much looking forward sharing also experience, of course, knowing that there is quite a journey ahead of us all, being, of course, a listed company in Belgium. But beyond that, I think what I would like to do is give a bit of an insight of how that journey could start. So, which is, of course, our experience, but we want to share that as well with the stakeholders today, because I think it is a journey that lies ahead for many companies. Next slide. So if you take already the current existing reporting that SIPEF has taken on for the last years, that started with materiality assessment. So it is a process whereby you will look as a business at the impacts on not only your supply chain, but also from an environmental and social context. And you do that very much from the lens of, or that was always in the last, I would say, I think we're already working on this concept for the last 10 years, whereby you say, okay, what is the business activity and what is the impact then on society and the environment? So by doing that, you analyze that together with your customers. So your customers are a stakeholder in this. They themselves, of course, have requirements set in their supply chain. That could be by a consumer good company that you sell your products into. That could say, okay, we want to see risk assessments from what is your greenhouse gas emission? How are you working, for instance, on forest? Are you making sure that you integrate your plantations well with, let's say, conservation values? And also, for instance, no deforestation policy. So with that, I think the supply chain was a big driver in the initial engagement on materiality. But the second part, of course, is also your shareholders, your boards, to say, okay, what do we see there? And I think there is where a very important part is that we had a lot of contribution from our shareholders to say, okay, have you looked indeed at the following topics? How is the environment being taken on board? How well are we performing towards our communities? So with that, I think there was a lot of support as well over the years to set these requirements as such, and also work with an implementation around the KPIs. So one is you identify what your material issues are, and you can think around indeed your environmental and social context, depending, of course, what supply chain or what products you are related to. And with that, you then, of course, engage your local teams. And with that, you come to certain KPIs. So if you think of your KPIs, you indeed take into account where do you impact on climate, what is climate in the long run going to do with your sort of operations, as well as with your current emissions. How do you set your emission? How do you calculate your emissions? And how do you actually make sure that you can reduce them over time? So with that, you set your KPIs, and then, of course, you reference it towards the universal standard. So there is within this framework already a standard that sort of applies on how you have to present your data, your figures, and how you have to excel on this process. So if you take that, SIPEF has been already in the last years working on this. We have actually published this year a fully integrated report, which means that we combined the sustainability reporting and the financial reporting within one framework. Can I have the next slide? And with that, I think you had already we presented some highlights that go also more towards the future setting, because what we have done there is said, okay, we know what our greenhouse gas emissions, for instance, are, and that sits around technically your scope 1 and 2, which means that it's very much your own direct emissions. So what you are using, for instance, as fuel, what your own exhaust fumes are, for instance, or your own control processes. And we said that already as we published that, we indicated that per ton of products, and with it also aligned straight on a reduction target. This is a bit the framework that we see starting to move, and that all has to do also with the Green Deal and the EU's commitments. But this is already the first step with indeed identifying scope 1 and scope 2. Where is then, okay, the onward journey? If you look at this emission setting, you really know that you also have to look at scope 3 at a certain point. I will come back to that because scope 3 very much means the emissions of your supply chain. In our case, we're working with smallholder farmers. Smallholder farmers themselves, of course, work maybe with fertilizers. With that comes then a certain emission. But to be able to actually report on the scope 3, and if you look at the size of our smallholders, for instance, in Papua New Guinea, where we also have an equal hectarage of around 14,000 hectares of smallholders, to even gather that data, to make sure that that data gets integrated into your calculations, is going to be quite a challenge. So with that, I think addressing where do challenges lie, if we look at these frameworks, it's very much working with your other stakeholders in that supply chain, like your smallholders, bringing them on board and integrating them in such a way that the requirements in the future will not become a burden to them, but that they can stay part of that supply chain. The other areas, I think, where we have seen for ourselves is that to be on track, we are capturing actually, so we have set up our targets. With that comes our biogas plant, so we are fully operating all our factories over time with a biogas plant connected, whereby we can use the biogas to also generate electricity. We can use it for our own factories, but we also can extend it to the grids and provide it to the communities around our plantations. So that is in itself where you then see how you mitigate on your sort of environmental impacts and particularly on your emissions. We also looked, of course, if you have 22,000 people that are, you know, your assets, that is where you work with, these are employees, you very much in the future have to look also how do you look after their well-being, how do you make sure that you deal with their occupational health and safety correctly. So with that, we also have set these as our KPIs and our targets. In the long run, I think that was one of the last parts where we indicated that it is important to look at production and how can we make sure, bottom line, that we increase our production per hectare instead of extending hectarage, as we also talked about, the controlled growth that comes also with existing hectarage and making sure on that we can produce optimal. we also have set a program, again, for our smallholders in Papua New Guinea, for instance, whereby we're working with them to replant on time to make sure that they also apply the best practices so they can also keep their yields and grow their yields over a longer period of time. These are just a couple of highlights that come from that materiality setting. If we go to the next slide, I want to sort of indicate what is ahead of us. And I think this is for many European companies the case. Of course, this is in a way also leading on how you can interact or how we need to interact as a company, that we have indicators in Europe to have a no net emission of greenhouse gases by 2050. So yes, we have a certain pathway to go, but we also know by 2030, there's quite a reduction expected for different supply chains. With that, they're looking very much at how do you make sure that, for instance, your investors are capable to continue to investing. So you also have to identify where your green, how your impacts are being managed, or how do you impact, how do you control your impacts? Just as I showed in the previous slides, that you set your KPIs, that you can show that your progress. And how inclusive is that transition? So in our case, in terms of our supply chain, we very much have to bring our smallholders on board on this transition. So with this European Green Deal, it very much shapes the future for many companies on how you need to start interacting on your impacts and what you need to start measuring and reporting upon. If you take the next slide. This comes down, it's a very busy slide, I know. I think it's very much also to show what is going to happen next. I just spoke to about materiality. What is ahead of us is that you don't only look at the lens of how the business activities are going to be impacted from a materiality concept, but also how you impact on your surroundings. So for instance, on the environment, on the people. So it's an inside out, as they call it, outside in. So it's becoming a bit more complex on how materiality needs to be determined and what reporting will come with that. So it will still be the first step, but it is called a double materiality. And with it, again, you have to set out your KPIs, engage with your stakeholders, but this also by 2025 will be validated, meaning that in your reporting structures, the validation will be on the basis of how have you set up your double materiality, and how did you control or engaged and managed the impacts that you have identified, and where is your, for instance, mitigation also built in, not only in your sustainability journey, but also in your financial, on your financial journey. So what are the impacts financially? For instance, take an example. If you look at your emissions, you have calculated your emissions, you have set your reduction targets. And then, of course, when you look at a net zero, how do you reach that if you still have a portion of leftover emissions? Will that be carbon? Is there a carbon tax going to come? Is that going to be a carbon tax that also implies on a business like ourselves? And how do you bring that then from a financial concept into your future mitigation, and how do you look at adaptation of that within your business processes? So that is very much a conceptual point, but I think this is also where everyone is starting to find their feet. I wouldn't call it a huge struggle, but I think this is one of the challenges that many companies we see ahead of them to say, okay, yes, determining from a sustainability angle a material impact is one. Linking that up, of course, in the longer run with your financial impact is really a study on its own. This is the journey we are already on as SIPEF. We're working towards, as I said, we have the integrated reporting started last year, but also to get ready for the European regulations to be coming into place for 2025 over the reporting of 2024. And this is one of the key factors which a company needs to start upon and working to determine these elements from a material impact. So with that, I think you probably have many questions. I think it's not to fully already present a case study, but I think it's also to help to give the context of what is ahead of us, and indeed not only for SIPEF but for all the companies that are in Europe, operating in Europe. I think it's important to be ready for this journey.
So thank you very much, Petra. Stephanie, I don't know if you already have questions from the audience, but otherwise I will start with the first question. Could you elaborate a bit on the materiality assessment? How do you determine what's material to the business and engage with the different stakeholders on priority setting?
Yeah, so I think first and foremost, I think it's of course, you have to look at your supply chain. So you have to look at your customers. I think one of the things, of course, is you produce to sell. In our case, we produce palm. So we very much have to align it with an important stakeholder, which are our customers. And I think there is where you see the different pressures, because in a supply chain, if you take a product like Nutella and Ferrero has very specific requirements, talking indeed environmentally. So you talk about no deforestation, you talk about making sure that you conserve areas, so you have biodiversity integrated. You have to make sure that the supply chain is traceable, transparent, smallholder integrated. So you have already particular directions for where in the supply chains that we are looking at are important to us as a supplier. So I think it shapes very much the first agenda. I think secondly, which at the end is important to say, okay, how do we make sure that we can do it? I think it's so also your operational teams are very important because they have to implement it. And then as discussed, the board is very important to take along to get the understanding also of the context of that supply chain, what the upcoming requirements are, and engage on what investments are behind that. And I think there is where you see that as a very much balancing act on what is material. But I think that shapes it very much based on the supply chain and the pressure to be able to supply in that supply chain.
And what do you see are the constraints of the upcoming regulations in the EU?
So I think where the constraints are is that there is no proven methodology yet. So we all are looking at, as a first step, double materiality, and with the validation. So you can produce now a double materiality, but it is the intent of the EU as well to follow the frameworks that you also get it validated. So you have to get it signed off by your auditors at the end to say, okay, have you actually set your impacts correctly? Have you defined them? And also the data that you put behind it needs to be validated. So you see already people having sustainability reports being published, and they already have a validation by, for instance, their auditing companies. But at the end, this for all of us will be the case. So it also means when you are producing a figure that you put in your report as a sustainability related figure, like emission targets or emission reductions, you also have to provide the proof that you are capable of delivering and that they can validate it within your operations.
Yeah, and on this greenhouse gas emission, so you said that you want to reduce them by 28% by 2030 against the 2021 baseline. But do you have mitigation options, and how will this link to reduction targets?
Yeah, so mitigation.
How do you look at targets and carbon offsets?
Yeah, so when you look at the mitigation, you first and foremost look at your own process. So what can you control in your own process? What are the biggest factors that contribute to that emission? in our case, and what I identified in the slides as well is our methane emissions of our open ponds. So we have, when we process the processed water, it's actually fully water, but due to the anaerobic digestion that you do in these water clarification areas, methane is being exposed, and therefore that is something that we first and foremost need to focus upon. So our mitigation will be, because the factor of that emission is the highest, so we know that has the biggest impact on our emissions. So with the biogas capturing, we are capable of capturing that methane and convert that to, for instance, another use. In this case, you can connect it up to a biogas engine, and then you get electricity produced. So with that, you get green electricity, which of course in itself has also a lower footprint. So with that, you first and foremost look at your own process and say, okay, what can I control within the context of our own process? Then secondly, you have opportunities. So you could say, okay, our opportunity for ourselves is, for instance, a conservation. So we have a big conservation area in Indonesia, around 12,000 hectares in South Sumatra. And there is where you can also say, okay, what sort of offsets does that create? Although knowing that the future in Europe is looking very differently at offsets. But at the end of the day, we also know that by controlling this area, making sure that the biodiversity is intact, that we look after it in a way that there are no conversion of forests taking place, there is a positive impact on that footprint, for instance. So it is a way to look at your mitigation steps, and which for us lies indeed in own process, as well as opportunities that are there in your operations.
Great. Stephanie, do you have some questions from the audience?
We do have. Thanks, Sophie. So there's a few questions around the materiality assessment again and the KPIs, but actually I'd like to touch upon one which I think is critical for the audience as well. There's a question there about, in particular, how does the board work with the management on the topic actually? And maybe you could share with us a bit how the board is set up, and how has the relationship been between, is everybody aligned on what we need to do, or have you had any lessons learned throughout the process that you could share with the group? And then maybe I'll get to the other ones, very interesting questions as well coming in from the group.
Yeah, and Francois, also how it started, how this sustainability approach started.
Sure. I think indeed it's a continuous process of, I'd say, conscience and getting aware of what we want to do and how we want to reach it. It started off 15 years ago, and we were probably one of the few companies at that time who really thought about sustainability and how to approach it. Of course, I'd say guided by our board members, European board members, Belgian board members who saw the products that we produce and had concerns about, I'd say, the sustainability for the future. And the management really took the option of saying, okay, let's forget the historical practice of agriculture as such, by producing as much as possible from as much land as possible, and look at it from a different perspective and say, what do we really want to achieve? Well, we want to have a product which can be identified, which is reliable, where the market will look at in a different way. And it was a journey where I think investors, board members and management all together, I'd say, created consciousness. Our biggest, I'd say, challenge was internally with our planters, traditional people who were there for the last 20 years planting palms and not really concerned about, I'd say, of course, fertilizer application, yes, to grow the palm, to what extent to conserve the areas and so on. So the biggest challenge was definitely internally at the first stage. Once we had the management all aligned, then it was, I'd say, explaining to the board what the next step was to be taken, and trying also to look into the market to see how other companies, I'd say, were taking that journey. and taking the best out of the market and following, but also being a front runner. So we try and still, I think, are a front runner in terms of sustainability. We try to aim to be, I'd say, somebody who uses. We're not inventing, I'd say, but we're definitely front runners in applying new techniques and new technologies to make sure that we are ahead and stay ahead of all the future problems of agriculture in general. The board is not structured in a way that we have a separate committee. Why? Because I think one of our first and key objectives is to be sustainable all the way. So I think any board member that joins SIPEF, I'd say, will have that sustainability hat on from the first day that they enter the boardroom. And if they wear another hat, it's going to be a very difficult conversation. And I see Sophie smiling because I think she knows for the last 12 years, I'd say, what the discussions have been, and always to find that trade-off between, I'd say, profitability and finding a nice return for investors to combine with a very steady and stable reputation in the market.
And could you tell us how you address sustainability at the management level? How are the teams organized? I mean, did it increase a lot in the last years? I don't know if it's for you or for Petra.
Yeah. Well, we have a global sustainability team at head office, which is 5 people, specialists who guide the rest of the teams. But in every subsidiary, in every estate, we have people in charge of sustainability. They are, I'd say, high-ranking, independent, directly reporting to the top management of the company. So the sustainability people are, I'd say, treasured and have a lot of power in our company to end any practice which is not matching to policies at any time and report timely and directly to the highest level of management. And that is something that is a practice that we apply for more than 10 years and which has been, I'd say, our insurance policy to make sure that the company is evolving as expected. So an internal audit on sustainability, but being more than that, I would say, with clear instructions on when to interfere and make sure that everybody is aligned.
That sounds like great advice. Yep. So there was a question which I think you covered a little bit from Martin around the profitability, value creation. I mean, you talked a lot about how you found, your place in this sort of niche market and also receiving some premiums from customers, and also how you've dealt with your customers' expectations in that area. I have a follow-up question on that one, which is maybe a bit of a hypothetical question, but how do you see the rest of the sector moving forward, actually, and what are the things that, I mean, you mentioned SIPEF is maybe a small player, and there is this sort of premium attached with palm oil that's grown in a sustainable way. What do you think is going to get the sector to a point where everybody is sort of at that minimum? And I guess that's some of the work that maybe RSPO is doing as well to help to push the sector along. I don't know if you have any thoughts on how to bring the rest along on this great journey that you are on as well.
Shall I take that one, Stephanie?
Yeah, please go ahead.
Yeah.
Sure.
I think you also, within that context, yes, the RSPO is trying to do a lot. It only covers 20% of the total volume being produced in the world. And I think that also shows that, yeah, we're looking very much from a European lens, but I think you have very different markets and market pools like China, like India. They will set a different pace when it comes to sustainability. I'm not saying that there it is not going to happen. I think for the sector, there is movement. I think if you look at the reduction of deforestation in Indonesia, and we have seen a very much coming to halt over the last couple of years. So I think there is definitely, from a government angle, engagement on how they see and perceive their control over an agricultural commodity and supply chain. But surely, yeah, I think having everyone producing on the level of SIPEF, and I'm not saying everyone learns still, it's a journey, but to have that level of changes and things that interact on, I think is not pulled by a supply chain that they are in. So I think at the end of the day, it will be I think it will take a longer time. I think it is an equal setting of how these developing nations also are going to push further with sustainability criteria. We will see it. I am absolutely convinced that the world is changing, and I think that there is engagement also in these countries on how they look at imports and supply chain. But it is definitely a long journey beyond the RSPO companies as well.
Yeah.
And Europe is definitely a pioneer in this field with the European Green Deal that you mentioned. But for you, sincerely, do you feel it's a burden, a lot of constraints and reporting and costs and teams and so on? Or do you see it as well as an opportunity, new technologies and improving the business model? Or
I think there's never one answer to that, Sophie. It's always a dual.
It's both.
I think you do see a lot of technology evolving and developing, which also ourselves we get all sorts of new technologies being presented and also used in on the ground. So if you look at just drone and drone technology, satellite imagery data, even if we want to call it AI, slowly you see that also coming into the agricultural business. But of course, I can imagine, and also on this forum, for sure, people are it is taking more people. I mean, it is resources that it will require. It takes quite a substantial amount of time to do the reporting. Yes, but it also brings a certain perspective to light of where you have the opportunities. For us, we also see an opportunity space of being a fully traceable, high quality player in the market. I mean, to us, we can present ourselves also to the brands that are looking for the same thing that we are also bringing to the market, right? So if they want to have a deforestation-free, high quality, well engaged with your social environments, it also brings, of course, that opportunity for us to be seen as that player. So it's both sides, but it's surely it is going to be quite an effort for every company to make sure that we are able to report and report and get the KPIs and get the data. Only the data in itself, you can imagine. With 3 countries where we operate in, getting all the data from everyone, single person that puts something on a piece of paper that needs to be measured and coming back to us here in Antwerp and put that into context. It's really an investment.
Maybe another question from the group. It's a very practical question based on your experience with your materiality, Petra. So Benoit is asking, they struggled to get a representative voice from external stakeholders with very little response rate. So I don't know if you have any recommendations or best practice for engaging stakeholders, making them part of the process, but at the same time, not taking too much time from them.
Yeah. We did a round of questionnaires as well, and I think it was really chasing after the inputs. Although what sometimes helps is to do it through collective. So like for instance, we are a member of collective networks. So you can, for instance, take the Roundtable of Sustainable Palm Oil, but you could also say a collective like an association. And to say, okay, through an association lens, you represent a certain voice, right? So that the association helps to reflect upon it. So you then also would assume that you get a more wider stakeholder angle. So for instance, the margarine and fat boards in Europe, we could apply, we can send sort of a questionnaire to and say, okay, could you help us with putting your perspective in from your members, from a collective membership angle. So NGOs, civil society is a bit harder. We're lucky we have had very good contacts in Indonesia as well as in Papua New Guinea to get a voice from civil society and also here in Belgium. But it's not that obvious. I think it's how much you work with civil society to actually get a voice that is representative. That's difficult. That's for sure.
Okay, thanks a lot. Good advice. And I think there's another one here from Catherine about the KPIs in particular, and she's wondering if you have any KPIs around developing the talents of local people. I think you talked about educating your smallholders and bringing them on board. So maybe you could talk a little bit about that. Do you have any programs for women or for education for the people that you work with? And there's also actually a question from someone else around the process of convincing the growers, which Francois mentioned was one of the challenges, which I think is tied to that as well, around the training. Maybe you could talk a bit about that as well.
Yeah, no, and I think future, as we see, workforce is we so reliant upon a workforce and people that contribute. So we have in Indonesia, as an example, a cadet training program. So we bring in cadets in a training school. So they graduate from universities, and there is a selection process, but they then come to us for the different, we normally select them for the plantations or for the factories or for administration. And it's a big group that we start with, and they run, they go on the job trainings, but also the theoretical sides in our training center. So they get all, the basics of the agricultural sides, the administration sides. And then we look, of course, at the testing and making sure that they can be up the mark, and then they get integrated into the business. So from a cadets program, we try to keep a constant flow of young talents. I think because that's really where the future also lies for maintaining a business like ourselves. But also we look at competence training. So we have just in the last few years developed a competence training, which is also used, of course, in your KPI setting and annual bonus cycles. Saying, okay, what are the competences of each job? Are people sufficiently trained, and what needs to be retrained, or where can you actually help them to further evolve? So all of that indeed to keep a certain standard, to also upgrade, because of course you see in the businesses over time, the technology that you have to apply, the new things that are coming in, people also have to be able to catch up. So I think with that, that is part of the competence training that we focus upon in Indonesia. That's one example. I think in PNG we do the same. We also have a cadet program. And with it, trying to also bring the same standards overall for the whole group, to say how consistent is your training and your talent management. I think in the longer run, that will be the word for us all, talent management.
Yeah, definitely.
I think Stephanie,
Francois, you want to
I would like to add, because there was a second question, I think, was going about interest of smallholders. How do you keep the interest of smallholders? I think you're one of the few companies who also share our premiums, and I think that's, of course, that's an easy one. So financial interest that we try to create. It exists for many years, and the more than 3,000 smallholders that are certified in Papua New Guinea, I'd say since certification they share the premiums. We share the premiums with them, and that's a very important trigger for them, because they immediately see the financial results of joining the company in the journey. And it's not just about, I'd say, yes, it's nice for the company, and of course we get a certificate. No, it's not about certificate. There's also a remuneration that goes with it. And I think that's been a trigger that we also like to transpose to Indonesia, where we have what we call our plasma shareholders, which are next to us and developing together with us. We help them to develop the plantations. They also share from day one, I'd say, in all the premiums that we get for our products, and that's a quite important one I would like to highlight.
That's great. Yeah, super. Okay, maybe one last question from the audience. Then I think, Sophie, you have a few as well. But the question, which is actually maybe a bit of a technical one, but it's interesting, around linked to how you calculate your greenhouse gas emissions, if there's a tool that you use, or how do you do that at global level? But then also an interesting question around, as your business is growing trees, can you calculate the carbon that is actually sequestered through the lifetime of the palm tree, actually, or is that not done? So maybe an interesting one on how you calculate greenhouse gas emissions and yeah, practically how it's done.
Okay. Yeah. In a sense, we have been a bit lucky. Maybe in the initial years, the RSPO has developed a calculator, which is based on setting default values. So you will have to work with a certain default value for, let's say, fertilizers. If you use fertilizers, there are definitely strict default values. So there is no, how would you say, triggering different values. So that's one. I think so that toolkit was there, and you have to put in, and you start first and foremost with indeed the hectarage that you have. So it goes over a 20-year cycle that you calculate your emissions of your estate. So the establishment of the estate, the land use change. Are you going from, for instance, previously palm to a replant palm? Then that has a certain emission. If you go from scrublands to palm, that has a certain emission. So that is all taken into account. So we were quite lucky in that whole process. Each step has a certain reference that was set by indeed the carbon calculator, which was developed by the RSPO. What we have done, because of course, the RSPO is a framing, but of course we wanted to bring in bananas, we wanted to bring in so for the whole group, our emissions. So what we've done is we worked on the basis of that principle, of that calculator, with our auditing firm, TÜV Nord, to develop actually our own ISO 19064 calculator, which looks at really an LCA, so your life cycle analysis, that really then also can integrate the other products, because that was a bit the limitation. We wanted to do it for the whole group and include the bananas, which of course will be based on the same principle. You grow a crop, you have indeed what are the sources of emission, what are the sequestering options. So coming to that second part, for us there is so palm in itself is a 20-year cycle. It's initially absorbing carbon as well, because it's a tree. So there's a certain amount of emission sequestering. And then you have, but over a lifetime, it actually balances it out, because you start, of course, all together fresh again when you plant a new tree. So that is in its way, you could say carbon neutral, but it sort of balances depending on the land use change that was before. Because you could imagine, and that's indeed the practice that we don't follow, but if you would convert a forest, you have more emissions than sequestering with your palm tree. So that is really where a very specific KPI also lies for us, no deforestation. So that means that you have to grow your palms on indeed palm to palm, rubber to palm, grassland to palm, but also to actually control these emissions very, very carefully. You almost, and I know that I think that is where Europe will move. They will actually look at certain tools to provide to certain sectors on how you can do a carbon emission calculation. But for us, we had to develop a bit from what we had in palm to to the other crops, and to integrate it all together. And with that, if you look at indeed our conservation areas, there is quite substantial sequestering of our conservation areas. If in the future that will be also seen as an offset, and that is a very technical debate, and I think also a bit of a difficult debate that is ongoing in Europe, but also in other countries. How are we looking at forest and forest conservation, and the potential offsets?
Excellent. Thanks a lot, Petra. And I see we're out of time, but I wanted to say thank you again. And I think it's really been a very interesting example of how the company has embedded the sustainability strategy really into your business and your strategy, and finding value out of it, which is excellent to see. And also I found it very interesting to hear about your use of data and reporting, and also the certifications, both from the RSPO, which I realized we were using the acronym, the Roundtable for Sustainable Palm Oil, which is really the sector sort of gold standard in sustainability for palm oil, which does certification, but also the CDP and all these other reporting frameworks that SIPEF is using. Actually, I think it's been really interesting to see how you use that data and that reporting, and more to come to also help with your strategy and understand where you can continuously improve and do better. So it's been very, very interesting. Thank you both for the time, and also to Sophie for being with us today. Thanks to everybody for your questions and your active participation as well. I don't know if you want to say a last word before we close, but I realize we are right at time, so feel free.
No, thanks for being with us, I think, and listening, and we're quite willing always to share. So if there are any questions further on, we're quite happy to help and support anyone that wants to learn a bit more.
Thank you very much.
I think we've learned a lot from others in the past, so we're definitely always there to share also our, let's say, what we currently experience and how we look forward to the future. The shared experiences are always, I'd say, giving better results. With pleasure.
Absolutely.
Thank you very much for your time and openness, because you have clarified lots of complex topics and make it more concrete. But it was very well prepared, and we're very grateful. Thank you.
Thanks a lot, everyone. Have a lovely afternoon. Bye.
Bye.